All right, so now we're going to go back to the balance sheet. This is going to be our comparison balance sheet. Now thinking about the summary balance sheet, when we might use it, how we might be putting it together, in essence, is the general idea. Remembering that when we look at the balance sheet and the income statement, those are the major financial statement reports. All other reports basically being parts of them, or usually giving more information about one or multiple line items of these two major financial statement reports. Our goal of bookkeeping is to create these financial statement reports, at least for year-end income tax purposes, if we're a small business and located in the United States, and possibly also so that we can provide this information to external users, like shareholders, for example, or possibly to get a loan, and for internal reporting and decision-making purposes. Our other goal as the bookkeeper is to communicate with whoever we need to do financial transactions with, which is when we're going to be using, in the plus button, the customer and vendor sections when necessary to track the outstanding receivables and payables. Now, I mentioned that because when we're communicating with our client, oftentimes it's the end of the year that it becomes really important, but we most likely want to be giving our client information periodically in as clean a format as we can, because that's going to hopefully give them confidence that, hey, we're doing the work, we're earning our revenue over here, and we're going to be here for you when you actually need the data at year end, when you have to deal with all the stuff you've got to deal with, including income tax reporting, possibly payroll reporting, 1099s, and then there's the kids wanting presents and all that kind of stuff, which is, that's beyond what we do, but, they have to worry about that stuff too. So you got all this stuff happening at the end of the year. It's crazy time, so we're going to have the reports ready for you. So how do we do that? We try to make things as clean as possible. So we have basically the standard balance sheet, remembering that the format of the standard balance sheet is basically going to have the normal categories for a normal financial report, meaning assets is a normal category for a balance sheet report, then current assets, but then within that subcategory, we have not the subcategories, but the account types, meaning if it's a current asset type of account, we're going to have bank accounts, because those have a special need within QuickBooks to be connecting to the bank. So in normal balance sheet reporting, we wouldn't really have another subcategory for bank accounts. We would just be grouping everything together under cash and cash equivalents typically. But for QuickBooks, we need the bank account because it's going to give us this triangle based on the account types, which have a special need of connecting to the bank. Accounts receivable, having a triangle because it has a special need of having a subledger breaking out the receivables by customer, not just by date. And then everything else is in the other current assets. So just a quick recap of that. If I go to the first tab and then we go down to the transactions, we can then say that our chart of accounts, let's go into the chart of accounts tab up top. We can see that the accounts are being set up here where our current asset accounts have a further subcategory of the bank accounts, the account receivable type, the other current assets, fixed assets, and so on and so forth. That's going to be useful for us to understand how the balance sheet is basically being formatted, and possibly how you can kind of clean up the balance sheet to make it more like it would be under normal financial statement reportings, in which case you wouldn't normally have the bank accounts. You would be calling it just cash and equivalents and combining those together. Now, beyond that, we could have further triangles breaking out, not by the account type, but then creating subcategories, as we can see with this particular one, for example, and which is more common when we're on the income statement, particularly with the expense accounts, which we might want to house and group certain accounts under parent accounts. So that's going to be here where we have the further breakout, for example, on the truck. Notice that these are indented. We'll talk more about creating the chart of accounts in a future course or presentation when we start the whole company file from scratch and enter all of the data from scratch. But we want to point that out here because that's going to be useful in terms of how we're going to present the information. So again, you might want to present it in a more simplified type of way, especially when you're first getting into, say, a presentation. So if I'm going to go talk to a client, I want to clean it up as much as possible to start with and possibly then lead people into the more complex topics that I need to get into. If I start with a month-by-month breakout of the balance sheet that has a vertical analysis and this report is spanning 5 pages wide, I'm probably not going to get anywhere because no one's going to listen to me off the bat, right? It's also possibly going to confuse people even if I just give them that report as basically my month-end normal bundle of reports. It's going to be too overwhelming. So we want to clean it up oftentimes, and one way we could do that is to have a summarized balance sheet. Now, you could get to a summarized balance sheet by basically just compacting all the triangles. I can just say, I'm just going to minimize the triangles here so that this is basically my summarized balance sheet. So I'm going to say all of the categories will be grouped together. And so that is in essence it. Looks like that, right? The problem is that if I print this out in this format, it might still expand them as I print them or try to export them as a PDF file. So when I'm working within QuickBooks, I can easily expand and non-expand. But if I export this to Excel or if I print as a PDF, then it might expand these items. So we could run a different report that has them compacted like this by going to the first tab, going down to the reports, and then we're going to go into the business overview, and we go into not the balance sheet, but the balance sheet summary. Now, remember that we were saying that most of these balance sheet reports can be created from the standard balance sheet, such as the comparative balance sheet. Now, you can kind of think of that as being similar here with the summary balance sheet, which can be created, as we just saw in essence, from the standard balance sheet. But once again, it won't have the triangles on the summary balance sheet, which will make it cleaner to generate and easier to print without them expanding, as well as export to Excel if we need to. So this is one that it does make sense that QuickBooks would put this in here as its own report, because we can't really create it like it is from the standard balance sheet, even if they didn't want all the other reports that were there that we could create, right? So I can right click and open this in a new tab. Let's take a look at it. And we'll go into this one. And so let's do the same range. Let's go from 0101. Let's go to 4 to 12/31/24. Let's just do it for 2024 because I think that's where most of the data is. And if I run that, there we have it. So now you've got a pretty clean looking balance sheet. So this will be if I was to give a presentation, this might be the lead off report that I would go into. If I was to give a batch of reports, then the question would be, do I want to give them this summary report first and then give them this report, which is basically redundant because it has all the same data in it, but this gives me more detail? Or do I want to remove this report entirely and give them this report, which has the added detail in it? And do I want to, even on this report, do I want to just show this report with one period, or do I want to have this year compared to last year? Because I could imagine I start with this report, and then I have another report just for the current year, 2025 possibly, and then I have a comparative report comparing the current year to the prior year. A lot of that information is redundant, but it's easier to see on a summary balance sheet versus a one period balance sheet versus a comparative balance sheet, which could then compare, for example, the difference between the two periods and the percentage breakout. So just a few ideas on how you might use these things. Now, normally, if you're working internally, you want to have the standard balance sheet and income statement open, as we have been doing, meaning this is what I would normally do when doing data input. I would open this tab and then have my balance sheet and income statement open, or possibly alternatively a trial balance, because it is in essence the balance sheet on top of the income statement, but without the subtitles, the subcategories, subtotals. and it'll be broken out in debits and credits. So that would be more efficient, but some people aren't comfortable with that. They'd rather see the balance sheet and the income statement. Therefore, I would open these two reports and then do data input over on this first tab, refresh these tabs every time I do the data input to verify that the transactions impacted the accounts that I thought they should impact, is the general idea. But I wouldn't use the summary balance sheet for internal purposes. Why? Because these categories are giving me they're not giving me all of the accounts on the balance sheet. They're giving me the account groups, meaning under current assets, we have the bank accounts. So I might have multiple bank accounts. Those are simply all the accounts that have the added functionality of QuickBooks needing the bank feeds. Under accounts receivable, I might have multiple accounts receivable accounts, although I typically only have one. And then under other current assets, I might, of course, have multiple other accounts under other current assets like prepaid assets and so on and so forth. And I might have multiple accounts under the fixed assets, that's property, plant, and equipment, like equipment, automobile, building, accumulated depreciation for each of those. Under the liabilities, I might have multiple accounts payable, although I typically don't. Under the credit cards, I might have multiple credit cards. Notice they broke out another category of credit card because, again, that's going to be like a bank account, meaning you can connect the bank feeds to it. And then we, of course, might have many categories under other current liabilities, including payroll liabilities, including sales tax liabilities or consumption tax if you're not in the United States of some way, shape, or form, current portion of loan payable, for example, and then we might have more components of long-term liabilities. So notice that this is a lot cleaner to look at than this when this is all opened up. It's a lot shorter of a report, and therefore it's a good lead-off type of report to lead people in if you're given a presentation or possibly if you're bundling the report together. Using it internally doesn't work because if I want to get into the checking account, if I click on this to drill down to the source data,